Welcome back. Well, the stock of Canfin Homes is really finding takers in the market today. It's up almost 4 to 5%. We'll just pull it up for you. Yeah, there we go, 5%. Interesting day to get the management on. Well, they have recently said that the housing finance industry is in a sweet spot and that the next few quarters are likely to be very good. So let's discuss this further. Girish Kousgi, MD and CEO of Canfin Homes, is with us. So Mr. Kousgi, thank you very much for joining in. And that's really the first question. I mean, that excitement is so palpable in real estate stocks. Almost all the real estate consultant notes are talking about higher residential demand. Now, what will this translate into for you in terms of loan growth this year?
If I have to look at last year, I'll start from COVID first wave. Last year, 40% of the year was impacted by COVID. Even though the impact was 40%, we degrew by 20% on disbursements compared to last year. And if I have to compare, last year, all the 4 quarters, in quarter 4, we did almost 45% of disbursements because growth came back in quarter 3 to a certain extent, and quarter 4 was really very nice. And this year, it's very good. If this quarter is going to beat the best ever quarter, which is last year quarter 4. Last year quarter 4 was the best ever quarter in the history of Canfin. And this quarter, we are hopeful of trying to beat quarter 4 of last year. I think that's the kind of demand what we are seeing across all geographies, across all segments. Yeah, to a certain extent, self-employed, non-professional is yet to pick up. To the extent salary has picked up. So in terms of outlook, I think for the industry, next 2 to 3 years is going to be really a dream run. What has actually happened is because of COVID wave 1 and wave 2, because of mobility, there was pent-up demand. And I think still that is being carried forward. So we have still large pent-up demand, and then of course the actual demand will come back. So in terms of outlook, as a company, we look forward to grow at about 18-20%.
Okay, 18 to 20%. That's a strong growth outlook that you have, Mr. Kousgi. I wanted to understand a little bit about what's happening with both the salaried as well as the housing loan segment, because over there in Q1, you saw about a 10% growth apiece on a year-on-year basis in both these segments. Where are you seeing the maximum traction coming from, and where do you think that there's still some more time to go before you get to the pre-pandemic levels?
Actually, if you look at quarter one, we lost about 45 days, which is about 50% of quarter 1 because of COVID second wave. In spite of that, we're able to put up good business in terms of disbursements. Quarter 2 is very good, and hopefully, if there is no third wave, we will do pretty well. What has happened is after COVID, self-employed non-professionals, there was some stress on financials because there was loss of income, even though it is situational, which is temporary in nature. So probably it will take some more time. And therefore, we also saw that self-employed as a mix, as a proportion came down to us as well. But there is a strong demand from salaried. So if you look at a portfolio, salaried was 70%, SCNP was 30%. Incrementally also, salaried was 71%, SNP was 29% till COVID started. After COVID started, salaried grew to 82% and SCNP came down from 29 to about 18% on an incremental basis. Now, this will change maybe in next 3 to 4 quarters time. I think whatever is the stress in SCNP is being taken care by increased demand in salaried segment.
Okay, got that. So, I'm not sure if it was this change of mix or something else which led to a bit of a dip in your first quarter margins. Anyway, first quarter was also second wave, so let's forget that for now. You're very confident of overall loan growth. What about spreads and margins? I mean, I think Q4, which was your previous best quarter, your margins were around 4%, 4.09. So do you expect to get back to those levels or perhaps even better than that?
I think first on margins, if you look at last few quarters, because of COVID, there was issue in terms of generating new business because we had lockdown and there was issue with respect to mobility of people. And therefore, a lot of banks, both private and PSUs, they become very aggressive in within secured mortgage. And therefore, it was very, very pertinent to have a different pricing strategy to ensure that we retain a book and also to grow our disbursements. And therefore, we changed the strategy, which opened up new segments for us. Our ticket size, which was 18 lakhs, now it is 20 because of our pricing strategy. We dropped the rates. We dropped the rates right up to Q4 of last year. And therefore, you could see that margins contracted. Now we have increased price from Q1 onwards, and therefore you will see that margins inching up from this quarter onwards. So the reason for Q1 margins to shrink is largely because of a strategy in terms of being aggressive in the market so that we can retain a book, grow incrementally, and also to try and take advantage of the pent-up demand which is there in the market because of COVID.
Okay, let's just pull up that that bar graphic again on the margins, because I have a follow-up question. That change in strategy, I'm guessing it won't be restricted only to the first quarter, Mr. Kousgi, right? And I'm guessing there's a lot of pressure and competition from big banks which are offering home loans at what, 6.8, 6.85, 6.9%. So how do you sort of, persevere in this very competitive environment? And what's the guidance you can give us on margin recovery?
So in fact, contraction of margin was not only in Q1, it was there for last few quarters, which is what I was saying, that we changed a pricing strategy about 4 to 5 quarters back. And you could see that happening. And also we had very clearly told that we will protect spread of 2.4% and NIM of 3%. So now I think we are almost coming to an end, and now you will see that both spread and NIM will start inching upwards.
Mr. Kousgi, the overall you've talked about the business, your own business, but I wanted to understand a little more about what's happening with the market, because every real estate player that we speak to says that this is the start of an upcycle which could last for about 3 to 6 years. What is your own instinct on how this could go? And in terms of affordable, premium, luxury housing, where do you see the maximum amount of demand coming from in terms of, ticket sizes?
I think it will always, start from the bottom. Affordable would, first see huge demand, followed by mid-segment and then luxury, and then the top end. I think that is what we have seen in the last many decades whenever these kind of events have happened, or if there is recession. So now we've seen affordable is doing extremely well, and mid-segment is doing extremely well. The next level, which is the high segment, started doing well. And also, I was looking at GDP numbers for Q1, which is very encouraging. And real estate as a sector started doing well. And it will last for next at least 5 to 6 years' time. So this will ensure that, across all segments, sooner or later, this industry will do well. And which will also help housing finance companies as long as they're able to maintain liquidity and profitability.
Okay, well, Mr. Kousgi, the market likes your guidance of 18 to 20% loan growth for this year. Stocks at a high, 6% higher. Thank you very much for joining us and giving us an update on the business. That is Canfin Homes. And with that, Anuj, over to you. Market still taking it a little easy this morning.
Oh, yes, and the mid-cap side of the market is now seeing a bit of a downtake. Advanced decline is now in favor of the declines. I think the Bank Nifty is the one which really stands out. And I've seen this, especially a day after the FI selling, and there were a couple of warning signs yesterday with the VIX going up, the volatility index, while the market was up. And I think that's perhaps playing out right now. 36,370 on the Bank Nifty. But let's get Mitesh back then. Mitesh, your thoughts? It's been a bit of a weak session, especially on the financials so far. Would you buy this dip? Or is there a short trade now? And what are your individual stock calls?
Anuj, I would want to buy it, but not at these levels. I was just talking about this, that possibly today could be the day when we could see the first leg of profit booking starting. So maybe at slightly more lower levels, I think you will see this kind of get into strength, especially as you were highlighting the Bank Nifty has been underperforming. I think 36,150 and then 35,980 are two support areas. So maybe around in that zone or around that zone, we will take a call to buy into the index. But stock specific wise, yes, we have some long position. Reliance still remains a long, Petronet and oil and gas stocks remain on the long side. So trading with mixed bias, but yeah, broadly advising stocks which have run up, which are overheated, to take profits over there. The calls which I have right now, Sun Pharma is a sell with a stop at 782.5 for targets of 756, and Indus Tower is a buy with a stop at 222 for targets of 239.
Oh yeah, Indus Tower has made a bit of a move today. Mitesh, IRCTC, it's just that, it's been a remarkable stock. Any trading advice here?
Anuj, honestly, I think, I've been kind of missed the last leg of the rally because, you always get worried. You've trailed the stop loss, you've seen stock keep getting overbought. I think, as I said, I think, this is still a stock where the longer term charts are very good, but as a trader, I would want to, wait for some consolidation or profit booking searching for a fresh entry. So I think in that sense, it's a miss.
Okay, got that. Thanks, Mitesh, very much for that. Well, on that note, I just wanted to point out Panacea Biotech as a stock, just because of the Sputnik vaccine, the first rollout, that stock's continuing to gain more and more traction. One of the mid-caps that's flying around today. In any case, we'll now move to the commodity markets. Let's pick up the cues from there. Manisha is joining in with all that is hot. Manisha, what's on your radar today?
Well, I'm looking at the natural gas prices, Sylvie, because we've seen constant gains into this one. This year started with nearly 180 rupees in the Indian markets here, and we are holding around that 340 to 350 mark at this point in time. Flat trades coming in right now, but we are trading on the higher side of the range. As I said, it has been a strong gain coming in for the natural gas prices. It's trading at $4.7 in the international markets. It's trading at a December 2018 highs right now, and we have seen 6% of gains in just previous week come in for the natural gas prices. It is nearly 48% for this year now. The latest trigger clearly comes in as the energy companies struggle to resume production post-Ida. The hurricane has led to some damage on the oil platforms there, and it also has been about the onshore power outages, which are leading to very slow recovery into that area. What we do understand from the latest reports is that nearly 81% of natural gas, or which is 1.8 billion cubic feet per day, is still offline there. And then there are reports of nearly 350 oil spills after Hurricane Ida. So that tells you that the recovery is really going to be slow. Earlier, the markets were anticipating 3 weeks before we could see all of that come back on surface, but it does feel that much time is going to be taken now. 99 oil and gas platforms are still evacuated. It's down from 288, but there are concerns still continuing here. And then take a look at the inventories, which have been constantly declining. The natural gas US inventories are lower than the 5-year and the 10-year averages as well. And the latest IEA report tells us that 2.5% of a decline on a week-on-week basis is what we are looking at in sense of inventories there. The demand from the Western world in the meanwhile has been quite strong, whether it's UK, US, Canada. The warm temperatures have led to higher demand for air conditioning, and that is where the natural gas demand also comes in from. So support is what the markets are anticipating at these levels as well. Europe prices have hit a record highs, and when you look at the charts as well, whether it's 10 days, 50, 100 or 200 days moving average, the charts are looking bullish on all of these counters too. Trading strategies then, and I spoke to Kovarji Group, they have a buy in a couple of commodities here. In case of gold, they're looking at upside targets of 47,880. It also is a buy when it comes to metals and energy from them. So the second strategy really comes in case of crude prices. 5,100 could be on charts.
All right, got that, Manisha. Thank you very much for the commodity strategies and the update for the morning. We will take a break right now. On the other side, we'll connect with GV Giri, Head of Research at IIFL Institutional